Hello everyone, this is Bala, MD and CEO of Aditya Birla Sun Life Mutual Fund. During these volatile times in equity market, which of course comes once in every 10 years, investors should look at this fall as an opportunity to build the portfolio, keeping in mind the long term. The investors also have to have a risk appetite to understand this kind of volatility, despite seeing your portfolio not performing to your expectations. Given the fact that the longer term equity market does well, given the fact the longer term mutual funds give a better return purely on an asset allocation basis. So clearly, the investors have to keep in mind that that I'm investing with some kind of purpose, that I'm investing for some kind of needs that's going to arise over a period of time, either for education or for retirement or for buying a house and many such other things that you may have as part of your need, on the base of which one is making the investment. Clearly, asset allocation, I think, key to the success. While investing in mutual funds, if put all your money in, say, in equity, it leads to some bit of higher volatility in the portfolio without understanding what is the ideal risk that you can take. When I mean ideal risk, is something you can fathom the volatility. At the same time, how much is the money that you have apart from the saving that you have in mutual funds, and all these things put together would define your risk appetite. And second, would also define your risk appetite, how far the saving that you have is going to last, and same time how far you can actually make an income out of working or out of having self-employment. And they want you to have some kind of fair assessment of such the future cash flow, on the base of which one decides that how much is the money that one should in equity. Given the fact that the longer term, I'm saying, say 10 years or 15 years, equity market does well, irrespective of whatever the market volatility that we go through, because the economy will come back and interest rates will remain low, and policymakers will see to it that economy is pushed to the next level, and to address some of the issues that are arising as we are seeing today. At every point of time on such crisis, the regulator comes together, policymakers come together, government comes together, and ensure that they actually plan something for the future, and that I can lift the sentiment back. So keeping this in mind, the investors have to look at the longer term investing as something as a principle. From the youngsters' point of view, a lot of the youngsters would have some kind of apprehension that I've been investing for the last 1 year or 2 years, 3 years. My experience has not been that great. What should I do? Clearly, if you look at the history, I think me being part of the capital market for the last 30 years, seen a lot of ups and downs. At every point of time, we always used to see after such a fall, there is going to be darker days going ahead. We have seen this in 1999, technology bubble happened. We've seen it in 2008 when Lehman Brothers as an institution, the established institution in US fell. And after that, we thought that everything is going to be hunky-dory, is not going to be something very good. And so we thought that the economy is going to collapse and market is going to collapse. And after that, of course, things came back. I think after every such fall, these are the common questions comes in the minds of investors. And especially the young generation, the current generation, which is millennials, in the age group of between, say, 18 and 26, they would not have seen some of this fall I'm referring to. You could have read it, you can, of course, Google search and see it, but you would not have seen it yourself. And we have felt it. And now I think when I look back on the base of those experience and what we are seeing today, I think today's scenario, absolutely no doubt, is much bigger than what you have seen in 2011 crisis. Given the fact this is not pertaining to one sector, it's not pertaining to one stocks, it's not pertaining to one country. It is a universal problem that we are seeing across the global, mainly related to the health and the medicinal field. There's a medical emergency, what we can call it. This is, of course, something unique. At the same time, the way in which the market fell, almost quite sharply it fell, the outlook has changed, and that is the time actually one can build your portfolio. Given the fact that you are investing, first of all, for long-term purpose, you are investing for the purpose of certain purpose for which these investments are being made. And finally, you also have an income that is going to come continuously at every point of time. So for that money can be invested at regular interval in the form of an SIP. And finally, given the fact that I mentioned about risk appetite, don't put all your money in say equity, or don't put all your money in only fixed income schemes. Look at an asset allocation which goes a mix of equity and mix of fixed income schemes. And within equity, I have reasonably good weight in terms of allocation, in terms of allocations, the large cap and large cap oriented funds. Then second comes is the mid cap from a longer term point of view. And third, of course, some bit of allocation, you also have it part of the index or ETF fund. And finally, within the fixed income, despite you seeing the volatility, given the fact that longer term adjusted return in fixed income schemes against tax is pretty decent. Therefore, also look at fixed income as part of allocations between right from liquid fund, which is nothing but a money market fund or money market fund, or banking and PSU fund or corporate bond fund. These are the kind of funds that we can also choose as part of our allocations. I think the principles in which you can work, 50% I'll put it in equity, 50% I'll put it in debt. And depending upon your age factor, if somebody is younger age, say between 20 and 25, maybe have large proportion of your savings in the equity, it can go up as about say 70 to 80%. And as you progress on your age, then you can probably rebalance your portfolio and then keep doing that continuously. Therefore, this volatility in the market, of course, it raises the questions in the minds of people that what should I do? I think given my own experience, given the way the markets have behaved in the past, one must use an opportunity to continue their investing and maybe start your investing if you're not already started. And if you already have investments, maybe try and see whether you can increase the investment. And finally, focus on asset allocation, which is basically keeping in mind the longer term objective of such investments into the mutual funds and your needs. And hope it serves the purpose of all of you who have been investing in mutual funds or who want to invest in mutual funds.